All right, folks. Everybody, welcome here. We're going to start in about 10 minutes. Just wanted to do a quick mic check here. Ero, what's going on? Good to see you here, brother. We do have Chandu, Aaron Shermer as well in the house here. JTM, Nikki, good to see you. Petro V, what's going on, Petro there? Siskiyou, and Mr. Walter Harris. Mr. Walter is here with us today. So doing a quick audio check. Let me know if the mic is good, folks, so that we can have everything good to go, ready at 5 p.m. when we start with Nic Chahine, lead trader from the Options Inner Circle chat room, folks. We'll get it started here in a few minutes. What's going on, Shahid? Shahid is in the house here with us. Q Freeman says the audio is good. Thanks a lot there. Nikki, good to see you there, Nikki. Thanks for letting me know here the audio is fine. Shahid, we're gonna get started here in 4 minutes. Yes, you are right, with Nic Chahine, everybody. Let's warm it up here. I'm just kidding. Like, we would be working out, but let's go. Let's get everything pumped up here for Nick. He does have a lot of material he will be sharing here. Skin Plus, good to see you there. What a day in the markets, right? And what a day in the chat room as well. Nick will tell you all about it, folks. Just wanted to do a quick audio check. We'll see you guys here in a few. All right. Everybody in the session, all right? I see everybody there in the chat getting ready. Let's give a couple shout outs here. We have, of course, Mr. Shahid, looking at us here from Pakistan. Iro, what's going on? David from Central Europe, Slovakia. Good to see everybody here. We have folks from all over the planet, all right? And the chat room itself, it's great, right? It's pretty much, we do have a few members here. Let us know where you guys are tuning in from. That's great. A couple of shout outs here, right? D Fang, D MacArthur, Dominic Data's in the house. Good to see you there. Ivan, J Coco, Javier. Let's see, Marlene, Bob, Julie Smith. Julie is in the house today with us. Let's see who else we got. Mike, Nana, Petro, Scott, T-Rock, Summers, Patricia, Ranby. This is Bangs. Everybody from Clifton, Michigan, what's going on? See Lifton, good to see you. Folks, my name's Rodrigo here. We will have a packed session. And I'm pretty serious when I say that, right? Today, if you're here, you are lucky. You have this opportunity to be with us here, right? With Nic Chahine, lead trader, professional options trader here at Benzinga for about 11 years. So this session that you're about to take part in right now, again, make sure you're paying attention. There's a lot of deep knowledge, right? A lot of strategies that we will cover here. So let me know in the chat. Sourdough from New York, New Jersey, Texas, California, Alabama. What's going on, people? Nana is from Australia tuning in. So folks in the chat, let me know when we're good to go. But basically, we will give here, right, a limited time sneak peek on how Nic Chahine is helping hundreds of traders create daily profits with options every single day, right? So there's some examples that we will show you today that a beginner can do, somebody that's advanced that they can do. You're going to basically have a sneak peek into the strategy that Nic Chahine is doing, right? We will talk about options, education, setups for equity. So there are people that trade stocks in the chat room as well, but most of them are options traders. So by the end of this session, okay, you will have a much better understanding of the market environment. And of course, if you do want to take it to the next level, okay, you will have the opportunity to join Nic Chahine basically every day, 9 hours a day, trade with him. And make sure to stick around until the end. We will do a live Q&A, real-time view of the inner circle room there with Nick, right? So we don't do this stuff live. I mean, typically we do it live, but since COVID, we do it this way virtually, works out better for everybody. So I think we're good to go. We do have Nick in the house. Richard says he's a beginner. This is perfect for you. I'm glad you're here. Sabertooth, good to see you. All right, let's go ahead and bring on the man of the hour.
He's right here. He's right here, coughing.
Nick, so what a day! What a day in the chat room, of course.
Yes, what a day. There was a little bit of everything for everybody today. Yesterday, even more so. Yesterday is one of those rare days where both bears and bulls had the opportunity to make a ton of money and lose a ton of money. Those are rare days. They don't happen. Usually it's one-sided when it's that extreme. But both had both extremes. Both had big wins and big losses in the same day, which means zigzag and big zigzags. Those are very rare. Today, it was more one-sided. Once we opened, and then boom, off to the races. It was one-sided. So only one side got to make a lot of money. Yesterday, no, it's a Z day. So pretty interesting. So today is going to be simple. What I'm going to share, I think is going to...
Right. Really, before we do get started here, because we do have a lot of people that are still trickling in here. For those that are not, if this is your first time, right? If this is the first time that you've ever been in one of these sessions, go ahead and put a 1 in the chat. If this is your first time here in any of these sessions, if you've been here before, put a 2 in the chat. That way, we know pretty much where to carry the conversation. See if you guys are, first timers. We do want to make sure that everybody gets the best out of this session, right?
It looks like about 35, 40% are new, at least of those answered. So,
yeah, there's a ton of
today's trade. Yeah, so that's okay. It was tempting to short all day, and if you did, you lost money. Okay, yeah. It looks like we have information here. So let me take the screen and we go from there. Is that okay?
Yeah, I think we're good to go here. And just if there's any questions, just make sure folks to use the chat. Don't use the Q&A. Use the chat. That's where we'll be giving you guys the special stuff and everything.
Excellent. Okay, let me move you back in. I don't know why Zoom insists on doing that. You set it up, and then once you take over the screen, it just moves everything around the way it wants to. Okay. Welcome, folks. And I know the teaser to get you in here is about making so much money. In truth, nobody can say that and apply it across the board. What do I mean? It is a blink of an eye to make 10,000 for somebody that's playing with $1 million. It is an impossible task to make 10,000 with somebody who's playing with 10,000. So what I'm sharing with you today is going to be applicable regardless of account size, because I'm going to share with you a process with which I'm going to attack next week. In fact, the next 3 weeks. And I think there's an opportunity. And the opportunity is for either side. I'm going to share my side, and you might have a differing opinion, but you can still apply what I'm telling you on your own thesis. So it's a process. It has like 3 little pieces. And then what I'm going to do also, if I have time, share actual methods, like an actual example of what I could do. This way, we're covering all angles. I'll share my ideas, and you can apply them or apply something similar to them. Nothing here is a trade alert to you're going to jump in tomorrow and take the trade. You're going to have to first develop your idea as to, okay, I agree with this guy, or I think he's full of it, and I think we're going there. It all depends. So before I go on, I'm going to use today's price action. You're looking at the S&P here. And this is what happened in the live room today. We had 310 people today. It was pretty tricky. And at the end, we were all waiting for this dip, and the dip wouldn't come, and the dip wouldn't come. And it finally came, but a little bit late. So it was $10 too high for me. I needed the close to be about $10 lower on the SPX for me to be super happy with the price action. So it's all about perspective. So now you're looking at 15-second candles, which are insane, right? But everything I'm going to say on this 15-second candle applies to any chart you're looking at, whether weekly, monthly, daily, it doesn't matter. So here, if I'm looking, it looks like a disaster. Oh my gosh, we're falling, and you're saying, where am I falling? So all I'm saying is just look left. Remember that. It's going to extend through our conversation today. Just from a thesis, you don't need to be a chartist. This is just simple logic, okay? So it looks like we fell, and it looks like it was random where we fell from, but it wasn't, because we had lines. In fact, this tick right there, a beep went on my screen. Can you imagine? The minute we corrected, the second we corrected, like 2 seconds before, beep, and then this happened. Let me see if I can prove it to you. This one? Is this today? Yeah. Yep. This beeped. Look at it. 12:46. So 14 minutes before the end of the close, before the end of the day. I'm on the East Coast. Look, 12:46. Look at the clock down below. Beep, and then this happened. How could I have known that? How could I have known the exact second this was going to happen today? The only weakness today, late in the day. That's because I was just looking left. What was that beep? You remember the CPI report came out yesterday before the market opened, and the market went crazy up, and then we opened up a little bit, and then we crashed. That was that high spike that happened before the market opened. The market makers needed to go back there and then touch it. And they did today. And then they go, okay, now we can come down. So that doesn't mean they're going down all the way down, but that was their touch and drop. So what I'm saying is the price action is not random. And this is the futures version of that. This is the S&P also, but you've heard of the E-mini, the futures contract. This is what this is. And I'm going to show you. Take these lines out. This was Wednesday morning before the market opened. The CPI came out. We went to the moon, and then we did this. Let me switch to the SPY. That's the beep. As soon as we crossed that, my beep came out. 2 seconds later, I kid you not, we dropped like the biggest drop all day. Look at this day, no red ticks. As soon as it beeps, okay. So this is the futures contract version of it. They're both the same thing. They're both chasing the SPX. Okay. So the SPX won't have this because the SPX does not trade after hours. So look, if I show you, the SPX is the index, but look, see, there's no high because there's no after hour trades. No one can buy the SPX. You can buy calls and puts on it, but you can't buy it. Like you can buy SPY. You can buy shares of SPY. You can buy futures contracts, but you cannot buy SPX shares. Okay. So that's why they call it cash settled. So what we're doing is using this logic of don't get long into a prior fail. Don't get short into a prior bounce. Look, we fell into the lows from, I don't know, Monday or whatever that was. Yeah, Monday. We bounced off of it. We fell again into the lows of that day. We bounced off of it. This, you can argue this was a base that has been going on. So next time we go down to like 41.20 or lower, we should assume that there's going to be some buyers. That's what's going on 3 times in a row, 4 times if you can count this one. So we know we have sellers here. We know we have buyers here. Now follow this logic. I'm walking you into my assumption for the next month. I'm walking you through it. So you follow that. We know where's support. We know there's resistance. These red and green. So I'm going to offer you how I came to my thesis. This way you can either absorb it or say it's garbage and tell me yours. Okay, so wait, I lost the chat. All right, there you go. All right, so the logic extends to any time frame is what I just said. So I'll do 1 day chart. Now we're looking at a whole year's day, a whole year's worth of ticks 1 day at a time. If you've noticed the rhetoric in the media, oh, recession, all of that, everybody's bearish. Well, this chart is not bearish, at least if you consider since last October. In fact, it's bullish. Why? We have higher lows and higher highs. How can I prove it to you? This is a low of October. June, super bearish crash. October, this is super violent. October was deeper, but not as violent. I can't explain the difference, just trust it. They're both bad. Extreme fear for no reason. Fear from words only. And then we had a higher low, and we have just set a higher low. So we have a series of higher lows. We have the bears desperately trying to stop the breakout from 4,200. Excuse me, my hand is jittery. So how long can they do that? How long can they do that before one of them breaks apart, right? So here's my take, and this is where my thesis comes from. I don't trade news. I'm a guy that says ignore the news, it's all bullshit. I promise you. 99.999% of all the news is just garbage. So why do I say that? The news does not create a new path. For example, that spike 2 days ago on the CPI, the CPI news did not create something new. The spike came because it was emotions bursting. I called it before the market opened. I said, don't buy calls. This is a relief rally. Somebody pushed back from my own 320 people. We had 330 people that day. They said, oh, you're wrong. I said, no, this is what I characterize that rip. It's called relief rally. Why? It's like, thank God it wasn't bad. Those pull back. The CPI news wasn't good. It just wasn't bad. And so the CPI report, I didn't even want to watch it. Why? Because there is no way it's going to tell me something different. I know there's inflation. I know it's not worse. I know it could be a little bit better. And that's exactly what it was. So why bother with it? So if the CPI causes a move this way or that way, that move is temporary and it's not a new price path. It's the path we were going to take anyway. It just expedited it and made it a little bit exaggerated. So they overshoot a little bit, but they don't turn around and change their mind. So if they were going to break out, they don't go break down. The news matter when and only when it changes the P&L. I'll give you on a company's perspective. Let's say company ABC sells pencils, and then the news comes out, company ABC is banned from selling pencils in America and China. Whoa, that is news that's going to change the P&L of company ABC. You can bet your ass the price path of that stock is going to change. So that's news you pay attention to. But news like that is very rare. On a global basis, I'll tell you a few pieces of news that actually change the global, at least the US money picture. Powell, in 2018, if you remember, he was raising rates. At the time, Trump was president. In October, September, Trump was calling for rate cuts. Everybody complained about the fact that a president shouldn't tell Powell what to do, so Powell didn't say anything. And then the market spoke. The market crashed into Christmas. And I think December 21st, 3rd, 4th, whatever, Powell said, oh, okay, I'm done raising rates. Because prior to that, he said, I'm on autopilot in raising rates, and the market went down and said, screw you. So then he said, I'm not only stopping the raising rates, I'm going to cut rates. So when they cut rates, the market rallied. And that's a bit of news that changed the flow of money into the US economy, therefore the world. What does that mean? He made it so violently bullish for people to do business, to lend money like crazy. Money was zero. So then that headline changed the price path. So you pay attention to that headline. How many of those have we had? Very few. Trump election, because he promised to cut taxes and all of that. So today in the chat room, actually yesterday in the chat room, it was pretty cool. We had a couple of entry points that were done based on what I'm telling you about. Okay, so let me see if I can show you. But the point is, we talk like this and we analyze like this at faster speeds and at lower speeds all day. And we have people watching out for each other. And I have pictures to show you how that works. And the pictures are just from the last couple of days, and they've been there forever. So we watch the market tick by tick on a 15-second chart, on a 30-second chart, on a 5-minute chart, from multiple angles. We watch multiple patterns and tools, 300 sets of eyeballs trying to help out. So at some point yesterday, let me see if I can show you. There you go. This one, I think this was yesterday, April 13th. That's today, April 12th. That's somebody helping. I'll go back to it. That's somebody helping. There we go. So if you can see here, a little tiny thing right there, that's my setup. I had drawn and set up a trade alert, actually one before and one late in the day. And it was an opportunity to go long, and then it delivered. So we discussed the entries, and I said, okay, I will buy this call. I can't remember, 409, 408, whatever it was. It was about $1, a little more, a little less. And then by the time the trade played out, that dollar turned into like 250 or 260. I can't remember. I booked the 40% win, maybe 38. And I thought, I knew I was booking it early, but that's my style. People who stayed in it got a double, and people who stayed in it all the way got way more than that. Here's Ryan, who had 400%. So Ryan shares his own trades left and right, and he's got good instinct. He jumps in, he says, I'm long this way for that long. And he comes in, I stopped out, or I added, and I'm booking some, I'm leaving some. So he posts his trades all day, every day. So his trades don't need a lot of skill, except for finding them, but to execute them, they don't need a lot of skill, because he usually says, I'm long Caterpillar calls. True story. I think 3 days ago, let's go to Caterpillar. 3 days ago.
Sorry, Nick, just want to confirm here. Ryan Harris said 400%. Is that how much he made on a trade, or?
Yes, that's how much he made. And that's one of many trades he took that day. He may have lost on one trade. I remember him saying he stopped out, I think on puts or something, but yeah, he crushes it. He in fact sent me his P&L direct message on our chat room here. He direct messaged me. There he is, Ryan 33, yesterday, and I said it's too small, I can't see it, and it was, I think, 500%.
Yeah, well, I mean, I guess that just goes to show there also that, I mean, you do also provide that coaching, that mentorship. That guidance.
Yeah. I mean, he knows not to boast. He knows not to boast in the chat room. So he was humble enough. He didn't want to, I just made 500 just in case somebody lost some money. So he says, Nick, I just DM'd you in the chat room. So I went to the chat room and I saw his message, and it just was too small for me to read. I clicked on the picture, but it didn't expand. So I asked him, what is this? And he said 500%. So I gave him kudos.
So here's the thing. Basically, I mean, we all know the chat room is a workplace. It's not just a chat room. It's a workplace. So people can go in there.
Let's set it straight.
Yeah.
Let me stop you right there. The live room, where I spend all day talking like this, minus the camera, sharing my screen, actually sharing multiple screens, and 300 and some people live. This is the live room. This is where consider it a hangout, a trading room, like a house we all hang out in, and we all are lucky to spend enough time in there. Some people pop in and out. Some people are there all day, every day. Today I started talking at 5. Yesterday too. No, today's 5:30. Yesterday at 5 a.m. my time. That's California time. The bell rings at 6:30 for me. We are already trading at 6:30, and all kinds of opportunities throughout the day, some fast, some longer terms. There were a couple of people stuck in credit call spreads today, and we had to work through those. There were a couple of losses there because of bad management, but they did try hard, and they probably learned a lesson.
Right. Well, the thing is that like not going like people, if you're watching this, you cannot afford not to be in the chat room. Opportunities are left and right there.
The
Yes,
live
in the
room.
live room.
I'm insisting on the live room because you know what, Rodrigo? Because we do have a chat room. This is for the people who are slower and absolutely cannot take a minute of their day to pop in and chat with me live. So this chat room here, this is typical old chat room. You can post a message, chat with other people. We have 87 people in there right now, even though the market's closed. And then I have a segment here where I post my own trades and nobody else posts. So this one doesn't scroll off the page. If you pop in once a day, let's say you have a full-time job, you pop in here once a day and say, let me see what Nic said. First of all, I post a pre-market open note with charts and levels and what I'm doing today. So today's message was, so to reset longs if I can, because I'd booked some profits and I did, and to find some good stocks to catch as a falling knife, and I couldn't find any, so I shorted gold. And then just to buy protection if I need protection, and I don't need protection right now because of the trades I'm in, they're finite. I don't have a lot of like outstanding assets that need protection. So I didn't do anything on that side. So you can come in here before work, during work, on your lunchtime, or after work when you go home, and you will see a trade setup. So you will see my gold short in there, and you decide whether you want to take it or not. And all the trades will get logged in here and here and here, but you get it first in my own words, and then they get logged later. So this is the chat room. This is static. This works for every schedule. If you're a parent, full-time caretaker, if you're part-time worker, student, full job, this is a good alternative for you. Okay, so this is the chat room. That's why I insist correcting you. I know you know it, but it's confusing for other people. This here is the live room. This is a completely different realm, posted somewhere else. And this is where, like this, check this out. This was a setup to short. Like this doesn't happen often. I hope you can see. Focus on this. Where is it? Focus on this area here. Okay, that was my chart. That was Geo wanted to short a whole bunch of people. Look, nice, Nic. So what happened here? Straight to the point. Yeah, I'm getting to straight to the point, 1 minute at a time. The setup was that the method I'm sharing with you today, that's how it works. You establish a theory, you set up the process, and you put metrics in place that allow you to manage your risk. Otherwise, you're just winging it. Okay, so this method just gives you a full-blown example of what I'm going to share with you on how to play the next 3 weeks, if not the rest of your life, but specifically the next 3 weeks. So the entry spot, my stop loss level was this red box. And look at where the stock died. At the top of the red box, it didn't even leave 1 penny extra. So I didn't get stopped out if I took that trade. And then the trade played out. Eventually, they got pretty close to here, but it didn't pay well. It was structured well, but it started higher than I expected, so it didn't pay well. It paid okay. Somebody got out with greens. I didn't take this because I had other trades working for me, but I did post it and track it for other people who did. So it ended up paying enough to get your money and a little bit of extra, but the process was solid. And that's the point. Even though it wasn't a perfect trade, it did pay, but not perfectly. But because the process was set properly, because I had a stop, and because it was well designed and well timed, it wasn't a disaster. So everything, don't worry about that. They want a trade alert. They want a trade. That's, instead of taking the fish, how about you listen to see if you can find a fishing pole that works for you, that you can apply over and over and over again. All right.
Right. Sorry here, Nic. And Michael has a quick question here. Would I be able to benefit from this if I'm very new to options?
Yes, because here, Michael, do you invest now in regular stocks, regardless of options? Do you invest now at all?
No, just getting to learn options basically.
Okay, but anybody that invests at all, the process I'm offering today works well with options, but works just as well, if not even better, with stocks because they move a little bit slowly. Okay, so anyway, my point was that members are offering trade alerts that are not from me, and they're working great. They don't call them trade alerts, but because nobody wants that responsibility. But anyway, here that day, he said, I'm taking calls in Caterpillar, and they got a good, nice profit. Today, all day, they're trading NVIDIA in and out, in and out. I didn't do it. They traded on their own. Okay, so back to my thesis. So here's my logic. This is the market, the entire market based on the S&P, which is a good representation of, quote, the market. It's getting less so with how big these companies have become and influential they've become. So here's my logic. Higher lows, that's an actual factual statement that the bulls are in charge from that perspective. The lower highs stopped. And now we can say that we've made one higher high, which is a change in behavior, which we haven't been able to do for a year. And so one can assume that maybe we have a building ascending channel. No, because of the starting point. And then we have dips now that are becoming to be bought. So you can consider this dip was bought, dip was bought, dip was bought, dip is being bought. So this last dip here that was bought made a higher high, correct? That's right here is good news number one. That's a change in behavior from the last 13 months, I think, from the highs that we established 2021 October-ish. This is the first significant higher high and higher low. So now, this week, drum roll, what if we make a higher high above this guy? So this is the February high of the S&P, the February high. Keep that in mind. So here's my thought. What was here? Anybody know? I'm going to walk you through making your own decision. I'll tell you. This here was a new headline that came out of the blue that nobody was watching. The financial crisis. The financial crisis, not crisis, right? The banks failed, correct. And it came out of nowhere. New shoe to drop. That's what they call it. There's a new shoe to drop. And listen, I lived through the 2008 crisis. It was freaking scary. When the banks go out of business, everybody's bankrupt. Well, luckily, the banks, the government this time decided to break all the rules and save everybody. That's because luckily it's the rich that got hurt first. Yay, rich. So they jumped in and saved them. So if the worst case of a giant headline like a financial crisis, which is pretty damn serious, caused this dip, what is going to cause this to fail? Right? It has to be something new that's not in here. Not like, oh, Powell's going to raise 2 times, not once. That's not new. Something new. War somewhere. Biden out of presidency. Some new question mark for Wall Street to poop their pants. Something new. I don't know what it is. We've had one time where we had a whole bunch of stuff going on in the world, and then we had, that was weird. It felt like somebody was behind me. We had ash in the sky. If you've been trading a long time, you remember some sort of a volcano, I think in Oslo, somewhere, that put a cloud of ash that stopped travel in a big chunk of the world. So business slowed, kind of like a shutdown of the world. So that also caused more downside. Something along those lines. How about this? I'll give you something that is pretty palpable that's bearish. Earnings. Next week, tomorrow, the banks start. The bank earnings, I think, they'll dip. If they dip, I'll try to buy the dip, especially JP Morgan. It owes me money. So what if Netflix and I think Tesla report next week, one day after the other, this first, then this. And then the week after that, we will have the giga cap, all the, I don't know the order. Let's say Amazon, Facebook, Apple, Microsoft, and Google. So they report. I'm interested in seeing. I knew it. Now I say alphabet because this thing wakes up. So what I'm afraid of, my favorite company in the entire planet, Amazon, if it reports lower sales, I don't think it has had a negative comp sales ever, or I can't remember last time it shrunk in sales. And more fearfully, if they say it's not going to turn around anytime soon, I think that's reason enough to crash the markets 7 to 12, 13%. Because for me, I'm so far been buy the dip guy into a higher high because the assumption is that the economy is still doing well. Because don't trust the reports from the government, they're garbage. Trust the reports that are legally bound to be accurate, and those are the P&Ls, especially the P&Ls from the mega caps. There's no way Apple can cheat on its P&L. Same with Amazon. And Amazon represents the consumer spending in the US, and that, they tell me, is 2/3 of the economy. If 2/3 of the economy is shrinking and in trouble, whoops, I don't think that GDP number has to be negative, and the garbage reports from the government are not showing it. So be careful. That's my concern. If the report from Amazon-ish companies is terrible, we might dip, and that might be strong enough to take this out. Until then, I say my assumption is, and that's the ticket, that's my thesis, my assumption is 4,500 before 3,500. I say it that way, meaning I expect more upside without any new shoe to drop. And in case you're not a first speaking English language person, a shoe to drop is a problem that, something falls on your head without seeing it. A black swan event,
Right.
something that comes out of nowhere. So without a black swan event or some really new bad news that we don't know about, it's easier, visualize it, to take this out and launch than to lose this. And look at this. This looks like it's not quite a head and shoulders inversed, but it is a neckline, that area that has stood for since last September, if not before that if you take this out, I think they can take this out and get to 44.5, 4,500, maybe even higher. But first things first, you must hold a higher low trend in order to have that assurance. So that's my thesis. 45 before 35, which means my mode is buy the dip, get long on dips, multiple trades. And I've already started this, and I've already made a lot of money on it, and I've already shared it in the live room, one piece at a time. So let me share with you the plan, and let me back up and tell you how I've already started implementing it. The plan is, number one, establish a thesis. I just walked you through the thesis, right? Number two, establish the method. And this is where it gets a little bit complicated for me, because it's a safer way to do it. The method has to be diversified. If you're a buy stock only person, that's pretty safe. Just don't go all in. Buy a little bit on dips. If something dips on earnings and you like it and the whole market's still not crashing, then you buy that thing on the dip. And I've done that. And if you're a buy options person, not sell options or spreads, you buy calls on dips and you hedge with puts. What does that mean? If you know options, you understand what I'm saying. If you don't, I'll explain to you later. But listen, if you know, let's say I want to risk $1,000 to buy calls on Apple. Okay, so whoops, if Apple hiccups, then I lose all of my money pretty quickly, or lose a lot of money pretty quickly. It's tough to recover with those losses, from those losses. So let's go to Apple. And I'll show you the visual. So this breakout in Apple is what I'm saying targets here. That's the SPX potential that hasn't even started. Side note, the QQQ. So the SPY trying to break out of the February highs, right? The QQQ already has. Watch. That's the February high in the Qs. They broke out and they're trying to establish footing. Now, this pattern right here, that red thing, is bearish. It says we're going back to 292, 293. Also, side note, let's go back to the method. Okay, let's say you're the person that says up is easier. and this is in the breakout, it's targeting 175-ish. If you pile in calls and then you have a bad couple of days, those calls would lose 40% of your money like that. If you pile in the shares, you don't lose as fast. But it's still, whatever you do, take partial position. And if you don't take partial position, hedge it. I'll give you an example. If I spend $5,000 on a trade, why wouldn't I spend, say, $400 or $500 on taking the opposite side of that trade? In options stock, if you buy $5,000 worth of calls, say out to May, to capture the earnings of Apple, so the 5,000 will be up here. Why not buy, like, for 2 weeks, some puts? So this way, if you're completely wrong and Apple does this, these puts that you buy shorter term will gain faster than the ones you bought longer term would be losing. So these guys would be losing, but at a slower pace than these guys gaining. So you would have time to jump in and say, you know what, let me take this whole thing off, and your damage will be minimal, if not a profit. So that's a simple way to hedge things, okay? So another way to hedge this bet up, and that would be to buy a call spread. So you would buy a call, but you hedge by selling a call above it. So you pay money for this, you collect money for that. So this way, you still bullish, less fast. And if this happens, you still have the opportunity to pretty much double your money. But if you've had a couple of red days, this doesn't, this one would be losing you money, but this one would be helping you that day in offsetting those losses, because it would also be giving you profits to offset the losses from here. This is called a spread. It's literally to spread your risk. And this is called just a vertical, easy, simple spread. No skill required. If you know how to buy a call and you have an account that's set up for spreads, you buy a call and you sell a call above it, you're good to go. So this is a debit call spread. Let's say you're bearish. You would buy a put and you would sell a put below it. Same time frame, just below it. Then you spend some money, and if you're correct and Apple falls, you have a chance to pretty much double your money. So this is, regardless of your thesis. My thesis is up, so I would be looking to do up. I necessarily will not be trading Apple, but I used Apple as an example. You have a question?
Yeah, no, I just want to let the folks know here, we're getting a ton of questions here, Nic, about the live room. So
let me finish. Let me answer the question. Do I buy at the money or a little apart? Or how far apart? Sorry. So the question is, I said you buy a call and a call spread. So here's the trick. If I'm buying a call spread, it costs the same, if it's close to the money. So what is close to the money? Current price is here. If I buy a call at, say, 169, that would be pretty much at the money. So if I sell a call above it, how far above it depends on you. $5, $10 wide. So if it's $5 wide, this should cost about 2.3 out of 5. So if Apple does this, you can get $5 total, but you paid 2.3. So the opportunity is to double your money. Same with the put. I'll buy the put just below current price, sell the one here. $5 wide or $10 wide is up to you. Personal preference, size of account matters, and all of that. So there's no one answer. I like to buy close to current price, because this way, if I bet up and I buy it here, I don't have to guess how far up. Versus if I buy a call here, I get the move right, it doesn't come fast enough, and I still lose money. How frustrating is that? No, get close to current price. It's a better quality thing. So then if it goes up, I'm already in the money. I'm participating. I don't have to guess how far up. Okay, go ahead. Sorry.
All right. Yeah, no worries, man. No worries. Again, thanks a lot for sending these questions. And so does Nic Chahine go over the student trade ideas? Michael, that's a great question. Yes, he actually does go through several member trade ideas. As a matter of fact, on the Sunday session where Nic reviews 150 to 200 stocks, well, I mean, basically the chat members, recommend the stocks for Nic to review. So yeah, he does it on a daily basis. And then Sunday, of course, you have a dedicated 3-hour session, full, like 100% trades from the chat room, right? Tickers from the chat room, from the chat members. So good question there. We have Jay. Are the sessions on Sundays recorded? Yes, Jay, they are recorded, and they are posted in the chat room as well that same Sunday. So these are the same sessions where you will, put in the tickers and Nic will review them. Let's see, Jeremy, what is the chat room schedule? Good question. So the chat room schedule, the blue chat room is open 24/7. The live session where the magic happens, that is from about 8 a.m. till 5 p.m. Eastern. Sometimes Nic goes overtime there just to help individual traders on things. Again, this is a relationship, right? I mean, we are definitely trying to help you, and we are more hands-on. We have a more hands-on approach than your average, whatever you want to call it, right? Like, I mean, we're here literally trying to custom build trades for you. That's what Nic does for you. Let's see. Jules, does Nic provide options education? Yes, there's a full section of videos pre-recorded, ready for you, and also on demand. So if you have a question about an iron condor, a credit put spread, a covered call, iron butterfly, what is a call, what is a put, how to use it, any sort of questions about education, Nic loves that sort of stuff, right? Nic considers, he's also a great teacher, a great educator. It's not just about great in technical analysis and, great with options and risk and how to use it, but again, passing that education along. Chat room notifications, you will have push notifications enabled. That's free. You don't have to pay for that. Next question. Is this just for day traders or people with full-time jobs? Kaylor, great question. It's for both. We have people that are working full-time, working part-time, passive income, active full-time. Again, it's a workplace. It's full of opportunities to make money. It's like you walk into a market, into a bazaar. And again, so many things that the market can give you. So that's kind of what it is. Julia, is this just for calls and puts or for spreads? So this is for everything, right? It's for absolutely everything. People that are starting, beginners, advanced.
We have beginners, advanced, options, futures, and equities.
Right. So, and there are people that are trading there that basically do options. So folks, so before we do move on here to the next segment here with Nic, a lot of you folks here have questions on how to join. I will put in the chat room the link for everybody to take part of this. It's only going to be there till midnight. So on Zoom and YouTube, make sure to check the chat. We'll put all the contact details there as well on how to join Nic's room.
Okay, so a couple of things before I forget. The power of trading with people. Here I am with you. How the hell did I know about Boeing falling 4% after hours? I'm trading here with you. You saw me. I didn't look away anywhere. Because one of my members just reached out and said, Boeing, something with production. So I went to look at Boeing. So if you're not paying attention, somebody is paying attention for you when you have 300 friends trading with you. I promise you, it works better. Side note. Okay, so on Boeing, if I was trading this thing, I would say this is an opportunity to bounce. So same here. But if they lose this, they come down to here, which should be a target of this red thing. So this is not this is not a knife I would catch yet. It's extended already. It could use a little bit more downside. But this headline does not change the prospect of Boeing. Boeing does not have a sales problem at all. They take orders. They have an order book log of probably 3 to 4 years. It used to be 10 to 12 years, but the pandemic put a ding in that. So let's say they have years of sales orders. They book the sale. They book the sale when they actually deliver the planes, something like that. So they don't have a sales problem. So that headline will not change the outlook of Boeing's success in the future. Somebody's asking, what is PTL? That's the best economic indicator. I don't know if I mentioned economic indicators today. I don't know what PTL is. You must have misheard me. So if you want to give me the context, I can probably guess what it is. Try to guess what it is. So JP is asking how far out I would take these trades. So what I would say, JP, that's a good question. Remember I was saying SPX, I would take a trade out in time. So I would take it out in time, because listen to this. If I am taking a spread, let's put it in lines. If I'm taking a call spread, since I'm guessing up, I would buy a call spread. I would buy a call. I would go up in the same time, let's say a month out, 3 weeks to a month out. And then I would sell a call above it. That creates a spread. How far above it? It's up to me. $5, $10 wide. So if it's $5 wide, I'm probably going to pay 2.3-ish, almost half. Why is that important? Because if I buy that spread for tomorrow or for 6 months from now, it would cost 2.3. If it's close to current price, every spread, calls or puts, will cost about 50% of the width of the spread. So why pay 2.3 for 1 day when I can pay 2.3 for 8 days, or better yet, 15 days, or even better yet, 22 days, 3 weeks out? So that's what I would do. Go out 3 weeks, maybe a month out, maybe even better. The cost is the same. Why would you not want it? Now, going out too far makes it a very slow mover. So if the stock market moves 3%, you can hardly feel a little green. Going shorter, you profit the fastest. But if you get it wrong, you lose everything. So it's not good. You profit fast and you lose fast with a short period of time. So for me, 3 weeks to 5 weeks. Okay, another one. Okay, how do I know how to trade because I have a full-time work? Okay, so listen, you can't expect somebody to trade your account for you. You will have to invest, find ways to give it at least 10 minutes a day. So here's how it works for somebody who works at home, have a full-time job, not works at home. You wake up in the morning, you must have 10 minutes for yourself. You can't convince me that somebody does not have 10 minutes for themselves. You can read an email. The email is 4 sentences and a bunch of pictures. If you don't trade intraday, you don't need the pictures. You just need the 4 sentences to keep in touch with the market. And then 10 minutes in the middle of the day, or 10 minutes or 20 minutes when you come home at night, you will see a write-up from me, and it will have a trade setup for me. I usually explain something about the trade setup. Like today's message was, I'm still in the mode of buying dips, and you know me, I'm looking for good companies who are falling on support. Today, I don't find any of these, so I decided to short gold. This is a counter trend rally trade. So gold is on the super spike, but one that I saw coming, and it's coming into a prior failure. Okay, so since I already traded it long for the gang twice and won, you can see my target was here. They overdid it there. I'm saying to myself, you know what? I'm going to try to short it into this prior fail. So that was my message. So you would come home tonight, and my trade was written up in plain simple English. You would look at it and you say, okay, I agree with this guy, or no, this guy's crazy. I don't want to short gold. I want to go long gold. Then you would do the opposite of me. So I took the trade, and you would decide whether to take the trade or not. And yesterday, you would have had another message from me with a different trade. And the day before that, and Friday, I usually don't give out trades. It's a pretty busy day. Monday, rinse and repeat. Somebody said, I don't know how to trade. Well, if you're willing to put in the time, you have a year to spend with me. And if you're willing to put in, I don't have official classes going, like today we're going to learn about this. No, but the class is open all day, because I'm in a room where you can come and ask me, hey, how do you put a trade on? Today, somebody asked me about how to set up a call diagonal. In fact, here's how they worded it. They jumped in and they said, does this put diagonal look correct to you? And they gave it to me. And I said, absolutely. So this is somebody coming to me for a question. Give my money. Shahid. Shalos Samalim. Shufi. Mina Isaac Masari. Anyway, so the idea is that if you're willing to put in some effort, you're going to find results. If you're going to sit back and do nothing, you're going to struggle in any system out there. We have a room that's conducive to helping you help yourself succeed. Okay, back to the story. How do you trade when you don't know how to trade? You learn how to trade. What do you mean? You don't trade, you invest. Do you know how to buy shares? You know how to go buy Apple shares. If you know how to buy Apple shares, you can invest. You don't need to trade. Not everybody needs to trade. If you need to trade, you need to dedicate some time to learn it. We're here to teach you if you want to learn. I don't hold classes just to learn how to trade, but I have all the information. First of all, when you join, you have a library of options videos that are super basic, super plain English, that you watch this one. It says, what's the put option? Then you can come up and say, hey, Nick, I watched that video. Somewhere in minute 3, you said this, I don't get it. I'll answer it. And then when you move on, what's a call option? You come back with questions. 10 minutes, 10 minutes, 10 minutes. What's a spread? What's a credit spread? This one is even 2 minutes. So, okay, please answer. Boy, this is a demanding bunch. I'm telling you what, you probably need a babysitter. Okay, so.
Well, I mean, it's just, look, here's the thing, man. Like, I mean, options, it's obviously one of those things that requires a little bit more attention to detail. And of course, everybody, I mean, this just goes to show that people really need that one-on-one, that hand-holding, Nick, with you. But I just have to say something here really quick. I just left the Benzinga office right now, okay? So I have to go down, kick down some doors to get you guys this deal. All right, but I got it done. All right, so we're doing the 1997 for the year, but if you sign up before midnight, again, we're not playing games anymore. If you sign up before midnight, before midnight, you will get 1 year for free. No excuses. It has to be done before midnight. You have to call or email to get the deal. We're only doing it today, folks, because again, we're trying to help you again in this deal. We don't do it. We're not going to do it again. Please do not call me tomorrow trying to get this. It's only until midnight. So folks, this is my way of basically saying, hey, like, let's work on this together. All right, folks? I'll put the link in the chat.
So this is Umits. First of all, the way you're asking questions is rude in a setting where you have hundreds of people in there. Bombard questions back to back, and then seconds later, you insist on me answering. Please reply, please reply. How about you follow the flow of information? So have some patience. I'll get to you in a second. You want answer, you want scoreboard. Here's a scoreboard for you. Look, just count how many green ones if you want to do math versus red ones, okay? Count. These are the greens, and these are the percentages of maximum gains won and lost, okay? These are in sequence. I'm not cheating here. The ones that don't have anything are still open. You count. Mostly green, right? Okay, you need an exact number, or is that good enough for you? All right, risk reward ratio, you're welcome. Risk reward ratio depends on you, okay? I'm pretty conservative. So what do you consider risk? First of all, I don't think you thought about it. So risk is 2 pieces. The first risk is, everybody knows it. How much money can I lose? That's the easy part. The more important part is, what are the odds of success? What are the chances I'm going to win or lose? Okay? So for me, I don't mind risking money if it's such a safer distance. For example, if you take a trade that risks $1 and you have a 50-50 chance of winning, to me, that's gambling. Go down to Vegas, play the roulette, you just have just as much success. I would rather risk $10 where I have an 85% chance of success, where it takes something extraordinary for me to lose. So the other side of my trade has only a 15% chance of success. I'd rather risk more money to get this. So the risk reward depends on you. I'm not a gambler. I'm aggressive in life. I race cars. I fight for the sport. Even now, I compete in fighting. I enjoy adrenaline. When it comes to money, I'm chicken. I want to know the odds of success, and I want to put them in my favor. That's why I'll give you an example. Real life, true story. I opened a new account in a new platform called Tastyworks, Tasty Trade now. I'm not recommending it. It's not great. I took 2 trades to begin with to test it out. I took 2 SPX trades. I'm going to give you information that may change your life here in this next sentence or two. So one of the trades won, one of the trades lost. $300 loss total. After that was months ago, maybe two months ago? No, month and a half ago. After that, I did nothing but sell puts in stocks that were falling out of control. Example, Square fell out of control on Hindenburg report, 25%. I jumped in, I sold puts. I told people in my group to sell puts. I shared every trade in there. I sold puts in Tesla 3 times. I haven't had one losing trade in that account. And it's up handsomely. I can't remember, 20-something% in a month. Let's say 15% in a month. Over the years, it's 15% per year for the stock market. And I bet you, I promise you, I haven't peaked at my results. But I haven't needed to pay attention to any of my trades. But those were safe trades that were humble. They weren't home runs. They weren't doubles or triples. They were, let me make $100 per contract off of this trade. Let me make $80 per contract out of this trade. Let me make $30 per contract out of this trade. And there were 100% winners after those 2 SPXs. And here's the other surprising thing that I noticed this morning, okay? I looked at the cost. Those 2 trades cost me almost 75% of all of the fees and costs for all of the other trades put together. That was incredible. So I'm going to dedicate that account to doing nothing but 1 or 2 contracts. And the account is not big. I promise you, I sent $10,000 to that account and I did nothing else. I was like, I'm going to try this platform. I'll send 10,000 and do that. 1 contracts, 2 contracts, 5 maximum if it's a low dollar thing. SoFi, Affirm puts in FRC. What? Yes, FRC when it crashed. We risked it on FRC. That was a crazy one. Tesla 3 times.
Can you walk us through the FRC moment?
Sure. FRC, if you don't know what that is, FRC is a regional bank. You remember when SVB failed? FRC, look, there's still 1 practice trade open. So it fell, and then it fell some more, and then it crashed because there was hints that it was going to go out of business. It was the next one to fail. So when it was falling, I did some homework. I read some, and I noticed that it looks like they're going to get caught, get saved. And Schwab, I read a note that the CEO of Schwab spent millions buying his own shares. I was like, okay, so the rumors cannot be true. Schwab is going to survive. So I did the same thing with Schwab. So if you did this with me, you got $1,200, it's actually $1,500. This one doesn't allow me to take full boat. And look, it's all profit now. And all I needed is for FRC to close above $5. Now, I, in real life, closed this trade because FRC reports earnings soon. If they haven't reported yet, I don't know. But it looks like they reported or just about to report. So I said, I don't want that. I booked it. I booked the loss, the profit. So even FRC. So my style of trading, I like to trade with safe, bigger dollar at risk, more safety. So the risk reward depends on you. I can tell you one thing though, if you do an iron condor intraday, your risk reward is 20 to 25% in one day. And how do you do it? 1 contract, for example, you can make $100 a day. Today it was tough because the upper end got challenged because the rally was insane. So I did help the people manage out of it. Okay. So the risk reward for that particular trade is 20 to 25%. Why? Because it's an iron condor. You bet bearish and you bet bullish at the same time. And if price ends up between the two, both win. And if you lose, only one can lose. So if you collect money from both and only one can lose, that's why the reward is so high, 20%, sometimes 25%.
There's the daily iron condor that Nic Chahine will do in the chat room if market conditions allow. But again, there's plenty of other things that you will also.
Yeah. So we're still, it sounds like I'm still trying to justify what we do as opposed to me flowing into the idea of trading the next few weeks. So let me recenter us. I told you my thesis. I'm not going to rehash it. I would say 4,500 before 3,500, which means upside is easier path than downside. The S&P is about to break out from the February highs, fails, whereas the NASDAQ already broke out from them. So tomorrow is pretty tricky. Anybody know why? The Dow might be a big mover tomorrow. Anybody know why? Because UNH reports before the open tomorrow. And why is that important? UNH is like a $500 stock. And the impact of UNH on the Dow is huge. It counts probably twice, maybe 3 times more than Apple, because it's a price-weighted average. So the bigger the stock price, the more the impact per dollar on the Dow would be. So if UNH tomorrow pops, it's only scheduled to pop, I think, 2% or drop 2%, which in my opinion, I think it's understated. But anyway, let's say UNH pops big time, it's going to drag the Dow. Let's say if it drops big time, it's going to drag the Dow. So that's pretty important. But so my thesis, up is easier than down. Second, method of trading. If you don't know how to trade, why don't you buy shares of this and that and this and that? Maybe the SPY all together. And don't go all in, take partial. And how would I do it? If I spend 1,000 to buy shares I would buy some puts to protect myself. Or if you don't know how to buy puts, you put a stop. So if I buy shares for $1,000, I write down why I bought the shares. And then I would also say to myself, the maximum pain I'm going to take is if I lose 300. I'm making these numbers up. Some people are more conservative. Some people are more aggressive. Okay. When you hit that number, you're out. This way, you don't let your runners, you don't let your losers run, right? Don't let your losers eat your account. So that would be one way. That's the simplest way. If you know how to do calls and puts, if you spend $1,000 on calls, why not spend $200 on puts, or at least 100 puts or put spreads? It doesn't matter. And I would buy the calls out in time. So May 19th, May 12th. And I would buy the puts for 2 to 3 weeks out. So if I go to May 19th, I can buy the puts for maybe the end of next week. This way, in the next 7 days, if we had whoosh, those puts I bought will explode in value faster than those calls I bought that are out in time. They're slower. These are super fast. Whoop, you get the profit. So then you're hedged. So if we start falling and somewhere around here, you go, oh, shoot, I'm going to just unwind everything. These lost you a little bit. This made you a little bit. Overall, you're still okay. Okay, so that's 2 methods. Method 3, which is my favorite method. Sell a put spread. If you don't know what that is, don't worry about it. It's not for you. Sell a put spread at a safe distance and buy a call spread. So the out-of-pocket expense would be minimal. You pay $200, $220 or something like that to buy the call spread. You collect about $1 credit to do this. So out of pocket, you only have like a 1.3-ish, I'm rounding, debit. So for 1.3 debit, if this happens, this really did not cost you 2.2. It cost you 1.3 because you collected this, because this one will die for maximum gains. So this is jargon talk about options. I usually explain all of this in the live room, like step by step. Today, I explained it like 6 times. I promise you. It was so frustrating, but it was so important that I don't mind doing it. I feel bad for the people that have to hear it 6 times. Imagine that, the teacher repeating 6 times what you want to hear in one day. You'll get it. I promise you. So my strategy would be to sell a put spread. That's hedging. It's a spread. It's self-hedged already. And buy a call spread. So let's say I decided to risk $5,000 on this trade setup. I'll put 2,500 in this. So I'll do 10 contracts here. And I'll risk 5,000 here by selling a spread of sorts. Okay. How about this? How about I don't sell a spread in the S&P? I sell puts in several different companies I like, which is probably even safer. Like, I trust certain levels in companies more than I trust certain levels in the S&P. Okay, so I can do that, and that would be a well-balanced, well-diversified, hedged, different time frames, setup for upside. Now, let's say you have the opposite view of me and you're bearish. Everything I said with the word call, put in there. So let me run you through it. Like if you don't trust me and you think I'm crazy and you think we're going to go this way first, totally okay. You sell a call spread instead of a put spread. So you sell a call and you buy call above it. That's bearish. You get a credit. How much? 90 cents to $1. I'm going to round it. $1 per contract. So if you do one contract, that's $100 for those of you who don't know options. I collect it. It comes into my account. How do I win? As long as price doesn't do that, I win. I need price below here to win. So that's shorting the market one way. The other way is to buy a put or a put spread. I buy a put or I buy a put and I sell a put below it. That becomes a put spread. It costs about $2.30 or 20 cents. So if this falls, this doubles in value. So if this falls, this doubles in value. This delivered the $1. So that means you only paid 1.3. So the profit here is a triple, give or take, not a double. So these are tricks. So you establish your thesis and do it that way. That's the way that I'm approaching it. So let's say you want to buy a put spread and you don't want to sell a call spread in the SPX. You can short a few calls. Today, FDX looked shortable. Gold stocks looked shortable, either the GLD or the GDX, or even specific gold, like gold, Barrick Gold stock. They're good companies that benefited on the upside, but they've gotten to, like I showed you, the GLD. It's running into resistance. Maybe I want to take a stab. You can be short the TLT or long the TLT to see which one fits your portfolio better. The TLT is tied to comments from Powell. If people feel like Powell is done raising rates, then the TLT is going to break out. And if people are scared about Powell's actions, then the TLT should go down. Can I give a game plan for tomorrow? Sure. I don't know where we're going to open tomorrow because we have a coin flip of the bank stocks reporting before the open. We have JP, Citi, and JP, Citi, and I think Wells. So I'm going to tell you a little story today. I just about stabbed myself because I had to repeat something over and over again. So in the live room, we do the iron condors that are expire the same day. Those are, they call them 0 DTE. You've seen them in the news. And today it got hairy on the credit call spread. And let me show you. I'm telling you this because if somebody said, how come if I don't know how to trade? So today tested my patience a little bit. Scotty, if you're here, I love you, but Shazam. Okay. So at the market open today, people jumped in. Hey, can you give me an iron condor for today? I was like, okay. So based on the open data, not based on charts or anything, I can provide an iron condor that has odds of success that are usually good. So today, as you can see, the calls got tested really, really, really hard. So one of our members got stuck short the market here via a credit call spread that looks like this. So they sold the 41.35 call and they bought the 41.40 call. So they needed the price to come down to here and close, right? I had one at 45 and I got out by this, with a scratch. So all morning here, there were a couple of people in a similar scenario, but they came to me early and I gave them instructions on how to deal with it. So the hand holding started early in the morning, and then the hand holding got so intense here that we did nothing but try to get Scotty out of his trouble. And unfortunately, he had problems with the platform. It wasn't allowing him to do this and that. And by the time he figured it out, the trade was in deep trouble. It was a small number of contracts, although it was a good amount of money. It's not a game changer, like it's not terminal, as they say.
Right.
But it was coaching all the way, step by step. And the thing is, the thing that gave me solace is what I said here. I said, it's early in the day. I shouldn't panic, but I should be ready. I said, so what I would do usually if I'm in trouble, I would shrink. So if I did 10 contracts, I would take 1 or 2 off, just so I'd say, okay, if the problem persists, I have a smaller problem. I said, or I would just buy an extra call. And when I said that, the call I said I would buy, I named a specific call because they told me what they were in. I said I would buy that call, and I know it sounds like a lot of money, but it's $400 now. You collected $1,000 to open the trade, or $900. Why wouldn't you risk $400 to risk losing on that trade? Sure enough, that $400 turned into, I forgot the number, but they would have made $1,600 or $1,700 off of one contract with this one. If they didn't do anything all day, that rally in that call that they would have bought would have offset any losses that they have taken as far as punches from the trade. So the defense would have totally worked. So yes, I do handhold, and yes, I do coach, and hopefully I don't need to do it often, but I know he will live to fight another day, and we'll get to it. Which platform do I recommend? Nothing, Nikki. Everything sucks at some point or another. E-Trade is an embarrassment. It's good for teaching. I use it for teaching, but it has so many bugs, it's embarrassing. Tastyworks is the easiest to get approved on everything. I don't know how that's legal. You push a button and they approve you for everything. It's like, whoa, that was easy. Okay.
Yeah, Nick, really quick here, Nick. So you're on the camp that inflation's cooling off a little bit, right?
I'm on the camp that inflation is overrated. It's not that it doesn't hurt people's pockets. It is mind-boggling to me that a government, this is not a political statement, that any entity would work to destroy its own prosperity to control inflation when inflation is not hyperinflation. We got so freaked out as a talking point on the political realm that we need to control inflation that we destroy the economy on purpose. This is un-American for a political entity, the Fed, to have a goal to break the doctor, the Fed, the doctor had a goal of destroying the patient's health in order to try to save them. That doesn't make sense. To try to say, I would rather live with a little bit of inflation rather than to know that my poor friends are going to lose their jobs. So I would rather have a job that doesn't pay well and pay a lot for milk than not have a job at all. That's my opinion. Nick, so I know that inflation is a problem, but I don't want to kill it at all costs. And when the Fed comes out and says we need to destroy the economy and there's going to be some pain, that's literally what he said. That's crazy. So yes, inflation is no longer at least measured metrics. I'm going to give you a sobering fact as to why you don't need to listen to news. Everybody's the jobs number. Everybody is like, oh, what's the jobs number? What's the jobs number? I looked up a document from the Bureau of Labor or whatever that's called. The department that puts out the number. I found a page that puts out the revisions. So apparently they revise it 3 times, and they have a table that shows the revision, the mean revision, the average revision, going back to 1970. 70,000 jobs. What? The average revision is 70,000. So this last jobs number, what was it? 330? I don't know. I'm asking. Let's say 330. 70,000 plus or minus accuracy. What? I used to be in the world of FP&A, so financial planning and analysis. I would have been fired on the spot. They wouldn't even let you go back to your desk. If you get the CFO, oh, that report I gave you last month about the P&L, missed it by that much. That's pretty scary. So the numbers are not accurate. So don't waste your time on it. Just use logic. Use logic. Okay. Back to the task at hand. Let's recap. Establish a thesis. Mine is bullish until another shoe drops, until another black swan. If not, if we drop 3 to 5%, and we should, I'm pouncing. How? Either SPX, selling puts in companies that are quality. Join the group. I share all of my trades. If you're in the live room, you'll know almost everything I'm doing on the personal side, including crypto. including staking crypto, 4% and 2.5%. My crypto account is massive, and I'm honest about it. Massive as in profitable this year. It's the highest it's been, and I still worry about my money. Like, I can wake up tomorrow, all of it gone if the bank is gone in the crypto, the one I bank on. So,
Nic, I just have to give a quick shout out to Michael, our newest family member here. Welcome, Michael. Let's go.
hey, Michael, I'll see you in the live room tomorrow. I'm exhausted. You can message me, tell me how you trade right now, but I'm exhausted. After this, I'm going to go crash, walk the dog and crash. So get a thesis. My thesis is up. I will buy the dip if it happens tomorrow, Monday or Tuesday. I will change my thesis if I learn otherwise from Amazon and company that the economy is actually broken. I need to see negative sales comps in Amazon and a negative statement going forward. Also, Walmart. Those are the number one and number two employers on the planet. I think combined, I'm going to estimate they employ about 2.6 million people. Holy sh! So that is a lot of people. They will tell you a lot about the economy. So whatever trade you take, for me, I'm going to sell puts and put spreads into support levels and try to buy calls or call spreads into breakouts. Okay.
Nic,
If I spend a lot of money, if I dedicate 20% of my portfolio to go long something or go short something, I should spend $300 to $400, $500 to hedge it, taking the opposite bet, shorter term, faster. Take the investment slower. Take the defense faster, not too fast. Like Tuesday, Wednesday, maybe fastest. And the offense, the stuff I'm going to buy, I should buy it 5 weeks out. So let me see, May 19th, that's the May monthly expiration in the options world. Or if you just buy shares, don't dump all in. If you wanted to buy 100 shares of company ABC, buy 20 or 30. If you wanted to buy 3 or 4 companies, please don't make them all the same. So don't buy Apple, Alphabet, and Meta and Netflix. They all look the same. Buy some tech, buy some IWM, that's the small caps. Maybe buy a little bit of SPY, some IWM, maybe some DIA. So spread the wealth and hedge everything. Covered call spread, they work. In Intel, I'm not sure you have enough premium. You sound like you belong in our room. You're talking about covered calls. I love that. Thank you. So if you don't know what that is, if you own an asset like shares, or if you own calls, which is just as good as owning shares, you're allowed to sell calls against your shares or your calls, shorter term. And I'll show you something. We have somebody who sells covered calls, but to a credit. We call that a Bartsky. You want to see something funny? Wait. So this is Geo booking a profit. This is somebody else sharing something. Thanks for the SPY setup, made 100% in just a few hours. Good call. When was that? Yesterday. Hell, this is the funniest thing. So Dennis goes in. There's Bart. So Bart came up. He says, Nic, what do you think about this trade? I was like, okay, I would do it. I wouldn't recommend it to people because it's a calendar or a diagonal, if you know what that means. But he sells risk. So he sells like a credit diagonal almost. So Dennis knows about it. And Bart has been here for a while. Dennis has been here too. So he goes, Nic, I Bart skied. That's the name of this guy. I Bart skied my way back to break even on those target calls because he did what Bart did in order to get himself unjammed. Luis knows that too. So that was pretty hilarious to somebody who knows what they were talking about. So pick your poison and take the time frame, and don't be afraid to spend money on protection. Back to spending money on protection. This morning, I told you this afternoon, we were hand-holding one gentleman to get out of this trouble. He knew about the call to buy here, and I reminded him to buy here, and he still didn't buy it. So that was kind of like a faux pas. That was a mistake. In hindsight, now he knows. So let's call it tuition. Let's hopefully he can survive to trade another day. So Intel covered calls, not for me, but better than nothing. And make sure when you sell covered calls, don't sell a call that would create a potential situation where you're forced to sell your shares at a loss. What do I mean? So selling a covered call, you own an asset. Let's say the person asking bought shares at 40. That's their entry price. And they want to sell covered calls now and they sell them at 36. Selling a call is the opposite effect of buying a call. When you buy a call, you reserve the right to buy shares, but not the obligation to buy those shares, okay? So the seller of that call that these people are buying has the obligation, you're obliged to deliver shares. So let's say price does that. So now this call that this person sold is called. So somebody is exercising their right. Hey, broker, I bought a call at 36. I want my shares. The broker says, hey, what was it? Patricia, your shares, we need them at 36. So now they booked a loss, not quite $4. Let's say they collected $1. So they booked basically they stop being long here and their entry is here and they have $1 buffer. So they have $3 loss. I don't do that. So when I sell a covered call, I make sure it's at least the same side as the same price as, or at least at worst is $1 below. Why? Because if it really pays me $1, then if they get me out here, I'm out even, no loss. If they get me out here, I made $1. Why? Because I collected $1 and I get to keep it. That's selling a covered call. Okay, let's see here. So if I took a $39 strike price calls at 61 expiring June on a days, a good hedge would be some 27 puts, 27 days. What strike price are we talking about? What ticker? Give me the ticker. Oh, Intel. What do you want to do? Took $39 call. Okay, why are you buying a $39 call when the stock price is at 32? Out to when? July. Okay, let's go. Perfect. So here, perfect example. We're in the live room. Bell is going. The market is open. We have. What's your name? I don't want to call you that. Anyway, Awan. I'm going to call you Awan. So they want to go to June. You said July. There's no July. So you're making that stuff up. Oh wait, Intel. Let's go to July. July expiration, somewhere in the middle of July. That would be the July expiration. $39 call. All right, so here's my take. Watch this. Let me zoom in so I can explain to you, talk to you. This is a matter of preference. Please don't change your style. I'm going to offer you mine. So if I'm going, how many calls would you buy to use your number? How many calls would you buy? So they're saying they want to go out to July to be long Intel. Okay, and they chose the $39 call, which is here. It costs 46 cents. 10. Okay, perfect. Perfect example. Thank you for offering that. So they said they want to buy 10 $39 calls. So in case you don't know options, calls, everything on this page are calls, everything on this page are puts. Price is right here. For these calls to make money, you need price to go like this, okay? So they buy this. If price moves, this gets more expensive, they make money. Why? Because if 50 cents now, if price moves, they could be $100, $160, depends. So here's my beef with that. I think you're wasting your money buying calls way up there. Why? Because you have like a 16% chance of success. Current price here, that's not my opinion. That's the market maker's opinion. That's the delta. So here's what I suggest. So buying 10 at this price is $500, okay? So that's what you want to risk. That's your risk size. Remember how I said I'd like to risk with better odds for me? Okay, so here, I would sell you those calls. Here, because the odds are with me, 84-16. And so what I would do if I were you, I would deploy the same amount of money. I'm not asking you to risk more. And instead of buying 10 of these, buy 5 of these or even 4 of these. That will be for $500, 500 and change. Why? Here, your odds are like 35 to 30%. You double your odds pretty much. Same amount of money. So you need to move, but not too big. Here, you need to move that big. Here, you just need a little move and you're in the money. It's not, you're better odds. So it's a better quality trade. This is a YOLO trade, hope lottery ticket. This has got a legitimate chance, more legitimate chance. So that's the first problem with your suggestion. I would deploy the same amount of money, so fewer contracts, but better quality contracts. So higher delta to buy. Selling, the exact opposite. So what is your second part of it? It would, a good hedge would be 27 puts. No, 27 puts are too cheap. That's 16 delta. You're pretty consistent. So how many puts are you going to buy? Same concept. If you want to buy 3 puts, buy 2 up here. 3 times 7 is 21. You buy, 2 of these will be 21. That's a better quality one. But I wouldn't buy them for July. I would buy the puts for May, or even shorter, May 5th, and closer to current price. You can buy at the money, JP. You can buy at the money. It's just more expensive, different styles. So here's how I would do it if I were you. We're getting convoluted here. I would buy here, and I would sell calls closer to now. So I would pay $164 to be long the $34 call, and go to April. Did I say 34? Okay, I can't go to April. April 28th. See, there's not enough premium here. And collect 35 cents for selling the 35 call for the 28th. But there's not enough juice, so I wouldn't do that. Never mind.
Nick, really quick, Kelsey is asking if she would, once joining, if this is the kind of help that, like in that they would get.
This goes on all day. I even shared a way to lock profits and call options after hours today. I don't think you know how to do that, but
really quick though, because we did have several people that just joined in late for the session. I want to recap this because you probably missed it when we talked about it the first time. So just to kind of, give you the summary, I went into the Benzinga office, I kicked some doors down, I got you an insane deal, okay? 2 years for $19.97 until midnight. Please do not call me tomorrow asking me, holy this is Florida, so that was crazy. But
by the way,
yes.
Anyone in Florida, are you dry? Are you still afloat? South Florida?
It was a whole lake. I'll tell you later. But basically, 1997, 2 years until midnight. Do not call me tomorrow trying to get this deal. You have until midnight. There's no exceptions, okay? That thunder basically was confirmation that, like, you guys better start calling, all right? This is until midnight. Nick, so the options chain breakdown is really interesting because a lot of people become, I guess, addicted with the Greeks, right? And they're looking at them and they don't use them the right way, right?
Sorry about that. Say that again.
That you help people do the whole options chain, like break it down.
Yes.
Education.
So there's education all day. I provide commentary on downside pressure and upside pressure. It's most days it's insanely accurate. It sounds fake. I wish you were here yesterday. I wish you were here today and the day before yesterday. People wouldn't believe it, but there's a joke around, Nick, don't put arrows, because if I put arrows on the chart, we're going there. It is incredibly accurate. And nobody is 100% accurate, but we're accurate enough to know not to make mistakes that are easy and to be ready. Somehow we kind of pick where headlines are going to break out, but just because we know where support and resistance is, like the beep today, it was fake, like beep. It was like the thing popped up on my screen and people are watching it. It's not like I can make this stuff up. 299 people at the close were there. Beep. It was hilarious. So the intraday action is insanely fruitful for somebody who's willing to spend a few minutes. If somebody has a quick question, you have me. How about this? How about my promise to you that if you need help, I'm there to help you any time of the day, during the day. And if we're closed because the market's closed, you're here, you have access to me through the chat room. And most of you already know my emails, which I don't recommend because then I'll be bogged down. So it is, if you're willing to learn, you will have a great experience with us. This is as honest a statement as I can tell you. I'm not the best trader out there, but I'm pretty darn good coach. Best players out there don't make the best coaches. I'm super strong in technical analysis. I'm not from Wall Street. I'm an engineer with an MBA, and I figured this stuff out on my own. As far as options are concerned, it's a joke how simple it is. If only you can flip the switch from buyer to seller mentality. I don't want you to sell, but seller mentality. So you see everybody that tells you, "Oh, there's a big pile of options, let me go chase it." Come on. This is not the idea. So somebody asked me what platform I use. I currently use E-Trades and Thinkorswim, and I'm starting to use Tastyworks. None of them is perfect. Each has strengths and weaknesses. This one has no strength. E-Trade. You're looking at E-Trade. This is what used to be called Trade Monster in the olden days. It got bought out a couple of times. So it's good for teaching. It's pretty simple to learn. Thinkorswim, pretty complicated if you want it. Excellent charting. This one has no charting. I've never used interactive.
Right. There's a ton of different platforms out there, man. So
plenty of platforms.
So here's an interesting thing.
Choose a platform that has SPX, because the ones that don't are usually limited for one reason or another.
And Nick, so today is a very special day, right? This is the reason why we were able to get these people this deal. It's because I believe that today, this week, the chat room will be officially 2 years old. Since we launched it in 2021. And I remember, it was just you and me in the chat room, and now it's 340 or so people there that you're helping every single day. I mean, full-time people. It's kind of scary to try to do this on your own and put real money on the line. So I guess, especially in these times, it's good to see the real value that it provides for so many traders.
I think no one should trade alone. You could do it well alone. First of all, it's pretty lonely. Second of all, you're swimming upstream. I'll give you an example. Today we had we have probably 12, 13 people looking out at things. At one point or another, you'll see a chart pop in the chart room, in the live room, and it's some money flow from this provider, divergence between algo flow and actual price, dark pool charts, and all kinds of, so people, and what is that, bookmap, a bunch of bookmap charts. That's how they traded Nvidia. Apparently it's ping-ponging between 260 and 270, whatever. I didn't pay well attention because they were doing it themselves. They didn't need me to intervene. They had a good beat on it. Plus I had my hands full with about 3 or 4 other people that were trying to trade the SPX successfully. So it was a pretty good day.
Yeah.
Collaborative effort. People have other people's backs. Like today I had a message from somebody, "Hey Nick, you missed a question that looks like," gosh, I can't remember the name. Dan? Anyway,
Mark
so
hello, by the way.
It wasn't Linda. So-and-so needs your help. So I went back to make sure that so-and-so got my help.
Hey, Nick, Mark Andre, he's a lifetime member. I signed him up, I think it was like a month ago. He says, "Look, guys, if you're not sure to get in or not, I'm a member. Nick is a beast. He answers questions all day long, helping newbies like me. Plus, he is trading. If somebody's having a bad trade, he will help." Good shout out there, Mark. Actual member there on the YouTube chat.
Is it Mark with a C?
Mark Andre Columbia. Yes, Mark with the C also. Yeah.
Okay, we have a few French-speaking people, a bunch of Arabic-speaking people, some Australian. I noticed there's somebody from Australia here, at least one person. Did you say Chahine this morning? One of you fed. There's a Mr. Chahine in the room. Is there another one of me in here?
Yeah. By the way, yeah, I just got Mr. Kavanaugh. I just got your call there, so I'll give you a reach out. Again, folks, just make sure to call in because I will not be able to do this for you tomorrow, the 2 years. So Mark, that is Mark with the C. And then AWAN Boys says, well, I believe we already went through that. I'm not sure there, Nick, that says, would you be able to do an analysis on Baba? I just bought some $99 calls.
On Baba, okay. So last time I traded Baba, the last 2 trades on Baba, I did well, even though I swore I wouldn't trade Baba. I went long one time and short one time. The one time I went long was I was following one of my members. He said, Nick, go long Baba. I said, okay. I jumped in and I went long. I didn't ask why. Made money on it. And then I shorted Baba up here and made money on it for the group. And I swore I wouldn't trade Baba. And here I am trading Baba. So listen to this about Baba. The only reason I'm afraid, first of all, the P&L looks pretty solid. So it's a good business. I stopped trading it when its own country was trying to demolish it. So the last thing I need is to lose money because of some asshole politician in China said something bad about the company. That's just variables you can't make room for. So technically, this is a long base to come back and take that out. Technically, if you take this out, 121 for whatever reason, it goes to like 160. But I can't tell you it's not going to be demolished by some politician flapping their mouth. So it's a complicated answer. I like the business from the financial statement perspective. Let's see here. Financially, let's pull it up. Go to the statement of income, income statement right there. So you can see they don't have a problem growing. Incredible growth. Trailing 12 months, a little smaller. So this is the one thing, I mean, I don't even know when it reports earnings. Out of the blue, sometimes it comes out and reports earnings. So there's some shrinkage in sales. God help us if we see that from Amazon. I would get really nervous. Don't care about the bottom line, but it looks like it's making quite a bit of money. Cash flow, which is cash from operations, there's no issues there. So they don't borrow money. Whatever they spend, even if they produce a loss on an income statement, they're burning their own cash. That's fine. Statistics, how expensive is it? It is probably the cheapest it's ever been, or pretty close to it. Okay, so there's no apparent deterioration in the business except some slowdown in the sales. So technically is where it comes down to. This is a weak point, but it looks like they may have filled it. Good support, tough resistance. If I buy calls here, I'm assuming up, like you are doing with Baba, which what I'm tempted to do with the market. I'm assuming that up is easier than down, even though there's just as much resistance as support, if not a little bit more. So you could win, but I don't have a statistical advantage. Now, Baba, I wouldn't mind selling puts. Correct. That's what I'm saying. And the political risk comes from overseas, which I know nothing about. You know, one thing is to guess what Yellen is going to say, or Biden, or Powell, but another thing is what the, you know, it seems like the news comes out of state newspapers over there, not even the government. So anyway, it's pretty strange. So it's okay. It's not for me.
Right. And let's see. I know that did you already cover Bitcoin?
I mentioned Bitcoin, and I issued a long in our group at 11.5, and I've been long since then. Here's a little happy thing. I'm going to give you a tidbit that you probably didn't know about. I woke up to a surprise 2 days ago. I was like, what's this? I got a note of dividends. Like, I don't have any dividend paying stocks. Guess what paid me dividend? Beto. What? So this is where I bought Beto for a group, 11.5, right there. And check out this fat dividend, 46 cents, 47 cents. What? On a $17 stock, 40 cents? Since when? I had no idea. I hadn't noticed that it did it twice before, only less, 15 cents, 10 cents. I have no idea why this is 45 cents. So I'm long Bitcoin from a perspective of, this is a trade that I plotted for the group since 2021. I said, we're going to have a correction in crypto, a big one, down to 22, maybe 19.6, and it went beyond that. So I'm sitting pretty. Example, I'm long Ethereum from the under $900. I think it broke 2,000 today. Yep, 2015. So I got long under 900, right down here at the very bottom. I'm not closing this. So I'm up 100% almost, and I'm not closing that. I'm long Solana from the 10s. I'm not closing that. Not a date. I wish I had the
So these are swing trades that anybody could.
Those are investments
investments. Okay,
that I
wow.
will close most when Bitcoin hits 42 or 46. So I know you're going to laugh, but guess what? When it was inching to 20, I said the next line is 22 to 25. We're going to struggle there. And then we're going to get to 30 to 33, maybe 35. We're going to struggle there. We're going to come back to 28, come back and beat 30, 33. And we may get to 42, 46, at which point I get out. Because 42, 46 was the big problem that brought it all the way down. Okay, that was a big neckline that they needed to hold. Maybe I'll trim along the way, but I'm not booking my profits. I'll tell you what, the Bitcoin, listen, folks, the riskiest part of trading crypto is not the price. It's the fact that if I open my platform on crypto.com, I don't know if I'm going to be able to get in. So I'll put my thumb right there and I go, yes, I'm in. All right, today is not the day. But there's been twice where I go to log in and it gives me some weird message. And one time it needed me to bring my driver's license and take my picture and email it or something. It's like, I'm not doing any of that. I'll just won't open it for a couple of days. And then it came back. So the riskiest part of Bitcoin trading, crypto, is where you put your money. So I found the solution for the gang. Bito traces the price of Bitcoin futures, the CLF. Whoops. Okay. Oh, what am I talking about? BTCF, Bitcoin futures. So it tracks the price of Bitcoin 1-to-1, pretty close. So, and it's tradable as a stock inside of any trading complex. So if you have an account with Schwab, you can trade it inside of Schwab. I just traded inside of E-Trade, and you can buy shares. And the shares were $12. Not only that, we were selling puts at $9.50 week after week after week after week, and then it took off. And it's like, okay, we can't sell puts now. They're no longer cheap. They're no longer expensive. The correction in crypto went away. Those puts were so hot. People were so scared of crypto. I was like, I'm okay. I'm okay. Give me the shares. Selling puts means that you say to somebody, I'll buy your shares if you want me to. And then time passes. They don't give you your shares. You keep their money. You repeat the process week after week. And then it spiked. So now selling puts is no longer easy. So long crypto by having non-crypto account, which is no risk from disappearing. You don't have that fear. It's like, oh, is this the day I'm going to lose my account? No, not today. So because my money is in Schwab or is in E-Trade or is in Thinkorswim or wherever you do it. So let's see, 5-10 minutes I have in me tops. Let's recap. So you guys came here to see how you're going to make big money. Now, like I started by saying, when somebody says, I'm going to make $10,000 from this trade setup, this cannot apply for everybody the same way. Somebody, like I said, that has $1 million bet can make $10,000 easily. Somebody that has $10,000 to bet, they cannot make $10,000 without betting at all on a coin flip. Mathematically, that's the only way you can do it. So what I'm offering you today, the method by which you get there, and I'm offering you mine, and then you can tailor it to do yours. And let me recap. Step 1, write it down. Step 1, you need a thesis. Okay, what's your plan? What's your game plan? My game plan is without a new headline, scary new headline, not the same old headline regurgitated. Let me give you a difference. Apple falls on the downgrade from blah, 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 Bank of America analyst. That's not a headline you need to pay attention to. You flip that person off and you say, yes, I'll still stay with Apple. Headline, Apple can no longer sell iPhones. That's a headline, okay? Exaggerated headline, but that's a headline. So make a distinction, okay? My thesis is up. What's yours? Now I know my mode. Buy the dip if it happens, or be long so you can catch the rip, okay? Now the method, how do I do it? Personally, I'll give you mine. I'm going to sell puts and put spreads into either the indices or spread it across good stocks that have support. This way, if we rally, I'm already green. If we fall a little bit, I may still win. Selling puts and put spreads. If you don't know what that is, don't try to learn it with this new trade, okay? If you buy shares, don't go all in. Buy 1/3. Which kind? Spread the risk, either the SPY or a couple of companies that look like this and a couple of companies that look like that. Not companies that move the same. Like you don't buy Affirm and SoFi and PayPal. They all move the same, and Palantir. Spread the risk. Small cap, large cap. Be mindful of earnings. Okay. And whatever I risk, if it's a lot of money one-sided, I should make the opposite bet smaller and shorter term in option terms. If equities, you can't do that. But with options, let's say you're buying calls or you're buying puts, you should do the opposite, shorter time. Where do I buy my bet? Out 5 weeks, like May 19th. That sounds good. And also, if the hedge is in place, don't make the hedge too big. The hedge is not to protect everything, but to give you enough time to jump in and fix everything. Okay. Diversify the approach. Diversifying sometimes means doing a spread versus a naked call. If you buy a call and you're wrong 1 day or two, you lose half your money, you're stopped out. If you buy a spread, you lose less fast and fewer dollars. So you're more courageous. You have better conviction. Okay. What else? Spread the time. Don't make every bet expire at the same time. When I said I'm going to sell puts, I don't sell them all in 2 weeks. I spread them. This way, if the market moves in one direction against me, not every bet I have goes sour at the same time. So I don't have to plug the hole in the levee. Like, how many holes can I plug at the same time? Spread the risk. Okay, so this is how one can make a strategy that can yield X dollars for them. This plan I just told you, with my account size, it is super easy to get to any dollar amount I want, as long as I'm thorough in my investigations and I'm not doing blindly. I need to be realistic. I need to be hedged. I wouldn't risk half my account on this, okay? Usually they say 5% is maximum of the account in one trade, 2 to 5%. But whatever you do, set stop, make an exit plan. What would I do if this happens? And what would I do if my target is met? So have an upside target idea and have an absolute level of losses that you will not tolerate beyond. If you risk $1,000, you should tell yourself, I will not allow myself to lose more than 200. Pick a number that's according to your level of tolerance. Some people are a little bit more brave than others. Okay, so your hedge contracts would be shorter term, yes. So what one voice is saying, my hedge contracts will be shorter in time. Yes. Why? Because I want them to act faster than the other one. So let's say that I'm wrong and price goes against me. Because they're smaller, they accumulate faster. So the overall losses would be mitigated better that way. But not too short so that they don't die in a day or two. Okay, what do you say? We've been here 2 hours almost, 1 hour and 50 minutes.
Yeah, I mean, but we really didn't do even the fast fire, which
let's go. Give me a couple of tickers. Let's go.
I mean, you gotta call your people, the chat room people here.
Give me tickers. The first 5 tickers. First 5 tickers. Okay. Moderna. All right, that's 4. One more. End phase. Okay, we're done. ERX, I don't know. I think somebody asked me today and I still don't know what it is. Okay, so what's this BS? Listen, folks, why are you bothering with this? This is junk stuff. So if I'm long shares and if I want to go long the SPX, this is energy. So here's the thing. I'm short Chevron, disclosure, and I'm making money on it.
I don't think you're sharing your screen right now, Nick. I don't think you're sharing your screen.
So ERX, I'm short Chevron. I can speak to it. So ERX has a line to beat just below 66, between 64 and let's call it 65. It's a problem area. And then another problem area around 69. So it looks like a breakout, but I think it's going to be pretty difficult. So if I'm starting longs right here in ERX, I am making an assumption that it's going to break out. So here, I'll give you a picture. I don't trust the breakout until it clears 69. I can't give you a picture because I can't post to anybody for some reason, Rodrigo, now. I can only post to you. So I can't do that. Anyway, so there's a lot of resistance between 65 and 69 ERX. Moderna. I don't trade Moderna because it's like China. I don't know the headlines. They come out every day. FDA, this, boo, stock up 40%, stock down 40%. I don't know. Has good support below 140, has a lot of resistance at 175. It looks like it could get to 170, maybe 182, 183. Buy the dip into 135 if it happens. More solid support into 120. If I wanted to own shares in the stock, and I do not, I would sell puts below 100 or 110 for income. But you should research the risks that come with that. Tesla. Tesla has a big problem into 220, 240. That's a weekly neckline that brought it down to two figures, which we knew about in the chat room, in the service, and we plotted it, and we missed it by $5 on the low side, maybe $7. So here's the statement. There's a gap down to like 142, 143. There is a hard line of support just above that at 162. So if it loses 160, let's round, it probably will drop to the 140s, high 140s. I would get long again. I've been long. In fact, I am long. I sold the 125 put for May, and it's green. I may take it off before the earnings next week. So Tesla has earnings next week. If Tesla breaks out from 218, it goes to 260 or 270. You heard that right. If Tesla breaks out of 218, 219, it can go to 260, 270. Until then, it's at risk from going down to below 160, 155. I think Enphase came last. Enphase. Not for me. I wanted to go long Enphase. I still think that it has sellers into 220. If it gets to 170, I will get long by selling a put spread or naked puts. It's a good company, good product. It has a huge problem at 230, 240, and they have sellers right here at 210 to 220. And with that, we call a close to it.
All right, there we go. Nic Chahine, lead trader. Any closing remarks here on why the folks should join the chat room, Nick? Before I go ahead and show them a few things here.
Yes, this guy. I will entertain you. I will help you trade. I will teach you concepts that are so simple, and it will change your life forever as far as trading. I promise you, you will have aha moments that will change you forever. I had mine, and I will pass them along to you. Trading and investing is not that difficult or complicated. You can make it complicated and open doors for pitfalls, but I promise you, you can simplify things and find your way. Not everybody can trade the same way. Let's find a way you can trade or invest. Silver 245, and you don't want to pay 2K for a chat room. You don't have to pay. You don't have to join. I hope you can. So I'm going to tell you this. Break that 2,000. Did I hear them say that's for 2 years? Okay. So if you want to trade alone, go ahead and do it. But over 2 years, if it's $2,000, so that's $80 a month. Let me ask you this. Would you sit in a room for 9 hours a day for a service that charges only $80 per person? You won't find another principal dedicated enough to do what we're doing here. I'm in the room with you every day, all day, up to 9 hours. I sat in this chair at 3:55 this morning. It is 3:55 right now in the afternoon. I got up 3 times. Feed my dog once, eat once, walk him once. Twice.
Dropping the mic there, Nic Chahine, as usual.
That's a flashlight. There.
All right,
Okay.
Nick. So So yeah, so tomorrow, again, folks, for everybody that did join, make sure to check your email. I'm going to show a few things here in the chat room, especially for the people that joined. Nick, thanks a lot for being here with us. I'll see you in the chat room tomorrow, right? How many push-ups, Zuski?
Today,
Recent member, Zuski, by the
155,
way.
and I still have 100 to go.
How many a day? Is this a chat
Well,
room?
I have
Oh,
a
yeah, that's
challenge.
right.
I need to do 70 at a time, and I'm up to 63 max, and I'm failing at 55-ish. So I do sets of 50, 55 push-ups to get to 70. I haven't been able to now, so I may have to eat my words on this one.
Skin Plus says, thank you, Nick. Excellent presentation. Nick, I mean, Nick is sharp, and I don't know how you do it, man, because it's like 9 hours a day. And I
You
mean,
see,
on Sundays.
when you're 25, 26 like me, you can do it. I'm like twice that. All right, let's go. You're welcome. You're welcome, Renee. Suski. All right, so I'm going to sign off of here, and I appreciate your time and effort and all of that. Rodrigo, as always, you rock, man. Thank you, Benzinga, for hosting the event. Listen, this is a kick-ass price. If you're serious about improving your trading skills, hop in. The room is buzzing. We would love some more people. The camaraderie is insane. It's a lovely place to be. I love it every day.
Yeah, no, and look, I mean, I put my neck on the line here for this stuff here. So Nick, thanks a lot, man. I'll see you in the chat room tomorrow at 8 a.m. Eastern.
All right, I'll see you later. Bye.
All right, my friend. Folks, that was Nic Chahine, lead trader there. B. Milburn, what's going on, Milburn? I joined. Absolutely, man. Send me a quick email, Milburn. Let me put the contact there. It's in the checkout there as well. But folks, for everybody that did join, really quick, I just want you to know what you need to be looking for, right? So this blue chat room is where you want to be, right? It's where you want to be. It's open 24/7. And on the left side, G. Sumik, Rodrigo, I sent you an email. All right, sounds good. You can call or email to lock in the deal, but please do not call me tomorrow asking me for the 2-year because there's no exceptions. It has to be before midnight. And I'm going to stay here literally till midnight specifically. Okay, really quick. On the left side, you see the inner circle chat. This is where everybody's posting. Every single person, Nic Chahine, all of the traders, people that are starting out, all the members, right? DK, Firefly Trades, Nuno. I remember Nuno. So again, a lot of the people have signed up through these sessions, really. And now we launched this chat room 2 years ago, so we do have some senior members there, right, that have not only been with Nick, but are even helping new members, right? Helping new members get in there. It is a workplace. It is a legit workplace full of opportunities for you to make money throughout the whole day with options, right? So in the inner circle chat, you will have that type of conversation. And again, once you're in the live session, it's totally different. And I'll go into that right now. So inner circle chat, everybody's talking, right? And then Nick's important messages. So once you go to that channel, this is a chat room that only Nick can post. And if you download the app Benzinga on your phone, you will get push notifications every time that he will post a message. Example, this one was today. It has a full market commentary, strategy for the day, short term, live session. So when we talk about the live session where Nick is 9 hours, right? Sharing his screen, answering questions back and forth, giving feedback on trades, on strategies, working with you, right? Holding your hand throughout the day. This is where you need to go, right? If you are learning, this is your 9-hour education session. If you're trading, this will be your 9-hour trading session, right? It can be really what it needs to be for you, where you are, right? Not everybody's in the same level, but you will take a lot from this, right? You will take a lot from the 9-hour session. There's just no way you don't. Let's see. Umit, send me a quick email. We can go over that. I'll put the contact there for you. One moment. All right, so this is the live session. Just wanted to show that to everybody here. Again, this is just market commentaries as well, updates on trades. All of this stuff will go to your phone by push notifications, right? Like mobile alerts. The Sunday session is from 10 a.m. till 1 p.m., Marlon. So you will get that here in the chat room, actually. Nick will post a link for that Sunday session. Let me just show it here really quick. And you will be able to submit your ticker, right? Or tickers, as many as you want. Let me see if I can find this here really quick to show you. Separately, you will get 20 email trades per month, all right? We're hooking it up just for today. So you will get 20 email trades per month, separate from everything in the live trading room. This is only for today, and this really, I mean, we're just doing it for you guys that are attending this session, right? So it was a private invitation thing here. Right here, you can see a lot of the videos that he's posting for the game plan. Let's take a look at this one. Well, this is from a little while
Hey
ago.
traders, Nick here on Sunday night, the 9th of April.
Yeah, it's from the 9th of April. Let's see if we can find something a little. Trading view, trading chat. Right, so this is pretty much where everybody's able to post. You will have the email trade alerts. You will be able to watch them here on the left side. Let me zoom in. You can click on any of these, right? Starter, enhanced, ultimate. Totals 20 a month. You'll get them by email, and you can always check them out here, right? Individually. Once you're in the chat room, I don't want to show you all the trades there, obviously, you know, like to respect for the paying members, obviously, right? But you know, there's, as soon as I click it, you'll see all the trades, right? All the trades. So once you join, you'll be able to do that. That's added on as well. And the Sunday meeting, make sure you're there. Michael, check your email. Thanks for joining there. And I think we're good to go with questions, right? We kind of went over most of the stuff here. So thanks a lot, everybody, for being here. Make sure to call or email today before midnight so that you can do the 2 years, right? The 2 years, 2 for 1. Right, it's until midnight. So tomorrow, please do not call me tomorrow. There will be no exceptions. There's nothing I'll be able to do, unfortunately. It has to be done before midnight. So the contact is there in the chat for you to reach out. I think we're all good here. Thanks a lot, everybody, for being here. Have a great weekend. I'm sorry, have a great week. Enjoy the day here and happy trading. We'll see you guys in the chat room with Nic Chahine tomorrow.